Welcome to Limitless Success TV, where we unlock the secrets to wealth, personal growth, and success. I'm thrilled to have you here today, because we're about to dive into one of the most powerful, yet often overlooked, secrets to building lasting wealth, a strategy that has stood the test of time and helped create some of the most successful people in the world. We're talking about none other than the Oracle of Omaha himself, Warren Buffett. Now, when you think of getting rich, what comes to mind? You might imagine it's all about being incredibly intelligent or having a knack for predicting the next big stock market move. After all, isn't that what we're told? That only the brightest minds can build significant wealth. That you have to be a financial genius to truly succeed in investing or business. But what if I told you it's not about being smart? What if I told you that the key to wealth isn't some complex strategy or insider knowledge? It's something far simpler and, in fact, much more powerful? Warren Buffett has built his fortune not through raw intelligence or a deep understanding of every market trend, but through a combination of mindset, emotional discipline, and a clear focus on what he calls his circle of competence. That's right, his secret is rooted in something we all can develop: the right temperament, patience, and an ability to stay true to what you know, not what the world is hyping up. And in today's video, we're going to break down exactly how you can apply these principles in your own life. No matter where you are on your financial journey, if you're thinking that building wealth is a complicated formula only reserved for the elite, or that it requires some high level of genius, I'm about to change that perspective for you. Whether you're just starting out and feeling overwhelmed by the idea of wealth creation, or you're already on your way but looking to refine your approach and avoid common pitfalls, this video will give you a clear, actionable roadmap. We're going to uncover the truths behind Warren Buffett's philosophy, the same philosophy that has made him one of the richest and most respected figures in the world of finance. What's amazing about Buffett's approach is that it doesn't require you to be a genius or a psychic. Instead, it's about having the right mindset and an understanding of your personal strengths and limitations. And here's where it gets exciting. What you'll discover in this video is that the principles you'll learn today aren't just for the ultra-wealthy or for people who have spent decades in finance. They're for anyone who wants to build long-term wealth, whether you're just starting your career, building your first business, or looking to refine your investment strategies. These lessons apply to anyone who's willing to stay committed, learn the right habits, and embrace the power of patience and discipline. I know what you're thinking, but how does this all work in practice? How can I actually use this in my own life? Well, that's exactly what we're going to explore today. We'll discuss Buffett's timeless strategies, how you can define your own circle of competence, and why this will lead you to make smarter, more confident decisions when it comes to investments and business ventures. And trust me, once you understand this concept, you'll be able to navigate the world of wealth building with a newfound clarity and confidence. One of the most critical elements of Buffett's approach is his emphasis on keeping your emotions in check. Especially during times of market volatility. We've all seen the stock market go through dramatic ups and downs, and it's easy to get swept away by the emotions of the crowd. But Buffett's approach is different. Instead of letting fear or greed dictate his decisions, he has developed an almost Zen-like ability to stay objective and calm, even when the world around him is panicking. And in this video, I'm going to show you how you can cultivate this same emotional discipline to make better financial decisions, no matter what's happening in the world. But here's the thing. While patience and emotional discipline are crucial, it's also about knowing when to take action and when to hold back. In the next few minutes, you'll learn how you can sit back and observe opportunities, waiting for the right moment to strike, without feeling pressured to act immediately or to follow the crowd. So, if you've ever felt like you're playing catch-up when it comes to building wealth, or if you've been frustrated by not knowing where to start, I want you to know that you're in the right place. Today's video isn't about complicated financial jargon or strategies that require a degree in economics. It's about breaking down simple but powerful ideas that anyone can understand and apply to their own journey toward financial success. I guarantee you, by the end of this video, you'll walk away with not only a deeper understanding of Warren Buffett's wealth-building secrets, but also practical insights that you can start using right away. Whether you're trying to grow your investments, build a successful business, or simply improve your financial mindset, this video will give you the tools and motivation to keep moving forward. So, Grab a seat, get comfortable, and let's dive into one of the greatest financial philosophies that have stood the test of time. Stick with me through the entire video, and I promise you'll leave with a new perspective and a blueprint for creating your own path to success. Let's get started. Section 1. The Power of Temperament. Warren Buffett's insight that you don't need to be a genius to get rich is, in many ways, revolutionary. It challenges what most people believe about wealth building, that it's reserved for the intellectual elites or those with some secret insider knowledge of the market. The truth is, Buffett's philosophy tells us that wealth is more about having the right mindset, the right emotional control, and the ability to stick to what you know, rather than trying to outsmart the system. This is an incredibly powerful concept that anyone can apply to their life, no matter their background or expertise. Buffett doesn't just rely on complex analysis or cutting-edge strategies. His secret is rooted in a simple but profound idea: temperament. Wealth, according to Buffett, is not created by reacting to every market swing, jumping at every investment opportunity, or following the herd. Instead, it's about keeping your emotions in check and having the discipline to stick to your long-term plan, regardless of the market's short-term movements. This is especially important when you look at the ups and downs that the stock market inevitably goes through. The market experiences periods of rapid growth and deep downturns, and during these times, it's easy to let emotions cloud your judgment. In fact, one of the biggest mistakes investors make is getting too caught up in the emotional highs and lows. When the market is going up, people get euphoric, thinking that this is the moment to go all in and make big bets. On the flip side, when the market crashes, fear sets in, and panic sells take over, leaving many people with losses that could have been avoided if they just stayed calm and focused. Buffett's success isn't just because he has a unique ability to identify companies with strong fundamentals. It's his ability to detach himself from the crowd and stay objective, regardless of what's happening around him. When everyone else is either overly optimistic or fearful, Buffett stays grounded. He knows that making decisions based on emotions like fear or greed will lead you astray. Instead, he focuses on what he understands and remains confident in the businesses he's invested in. And here's the key: Buffett understands that there will always be opportunities, and it's better to wait for the right one than to make hasty decisions based on momentary emotions. This concept of temperament applies beyond investing. It's a life lesson. How often have you heard friends, colleagues, or even strangers talking excitedly about a stock they've heard about, an opportunity they've just discovered, or the next big trend? How many times have you felt the pressure to join in, simply because everyone else is talking about it? We've all been there. It's natural to want to be a part of the conversation or to jump on the bandwagon when something seems to be trending. But think about the times when you've acted impulsively or based on excitement alone. Did it always turn out well? Probably not. In fact, some of the best lessons in wealth building come from learning to say no. Saying no to the distractions and noise that are constantly around us, whether it's a new trend or a surefire investment. Buffett himself has said that the greatest opportunities come when you have the discipline to stay focused on your circle of competence and avoid the temptation of jumping into things you don't fully understand. Let's talk about an example. Think about the dot-com bubble of the late 1990s. Many people were rushing to buy stocks in internet companies, even though they didn't truly understand how those companies would make money in the long term. They were buying into the excitement, not the fundamentals. As we know, when the bubble burst, many of these investors lost big. Buffett, on the other hand, stayed out of the frenzy. He didn't jump into a market he didn't fully understand. He stayed grounded and focused on businesses with strong fundamentals, even if they weren't as flashy or exciting as the latest tech startup. His restraint paid off, and those who followed his example were much better off. This is the power of temperament. Buffett's ability to stay calm, detach himself from the noise, and make decisions based on his own understanding of the world has been a key driver of his success. And it's a lesson we can all learn from. Whether you're investing in stocks, starting a business, or simply managing your personal finances, the ability to stay objective and avoid emotional reactions will set you apart from the crowd. So, the next time you're tempted to follow the latest trend or jump into an investment because everyone else is doing it, take a step back. Ask yourself, do I truly understand this? Is this in my circle of competence? If not, It's okay to wait for the next opportunity that fits your understanding and goals. This kind of patience and emotional discipline may not make you the richest person in the room overnight, but it will certainly put you on the path to lasting wealth and success. Section 2. Understanding your circle of competence. Let's dive deeper into one of the most important principles that has contributed to Warren Buffett's incredible success: understanding your circle of competence. This concept is one of the cornerstones of his investment strategy and is something that can truly change the way you approach not only investing, but business and life in general. Buffett's circle of competence is a simple but incredibly powerful idea. It refers to the area of knowledge and expertise where you are most comfortable and capable of making sound decisions. The beauty of this concept is that it's not about being an expert in everything, but rather about knowing where your strengths lie and sticking to what you understand. You don't have to be the smartest person in the room, but you do have to be honest about what you know and, more importantly, what you don't know. Now, this doesn't mean that you should limit yourself to only what you already know. On the contrary, it's about constantly improving and expanding your knowledge within a specific area. But here's the key: it's essential that you focus your energy on industries, companies, or markets that you have a deep understanding of. This prevents you from spreading yourself too thin and getting lost in areas that are outside your expertise. A great example of Buffett's application of this principle is his investment in Coca-Cola. It wasn't the flashy nature of the company or the fact that it was one of the biggest brands in the world that attracted him. What appealed to Buffett was his deep understanding of Coca-Cola's business model, its products, and the strength of its brand. He knew that Coca-Cola wasn't just selling sugary drinks. They were selling a global brand with immense recognition and an established customer base. The business was stable, and the market potential was huge. Buffett's familiarity with these aspects gave him the confidence to hold on to Coca-Cola for decades, making it one of his most successful investments. He didn't need to know everything about every company. He just needed to understand the ones that mattered most to him and his strategy. The lesson here is crucial. It's so easy to get caught up in the noise and excitement of the next big thing. Everyone talks about the next revolutionary technology or the latest trend in the stock market, and it can be tempting to jump in just because you don't want to miss out. But this is where Buffett's strategy stands out. Instead of trying to chase every hot trend, he focuses on what he knows best. He invests in industries that make sense to him and where he feels confident about the long-term outlook. It's about avoiding the trap of being swayed by hype and staying focused on what you can actually understand. Think about it. How often have you heard of an investment opportunity that sounds amazing, but when you dig deeper, you realize you don't fully understand the business or the market? Or perhaps you've invested in something based on the advice of others, only to find that you're not entirely sure why you made the decision in the first place. This is the danger of stepping outside your circle of competence. The more you venture beyond your areas of understanding, the more vulnerable you are to making poor decisions, whether that's based on fear, excitement, or simply being uninformed. But when you stick to your circle of competence, you make smarter, more confident decisions. You avoid the anxiety of trying to keep up with every new market trend, and you reduce the risk of being swayed by external opinions that might not align with your own knowledge. It's a strategy of focus and clarity, one that Buffett has mastered over the years. Here's another example that illustrates the power of staying within your circle. Consider the world of technology investing. There's no doubt that the tech industry has created some of the most successful companies in the world today. But if you're not a tech expert, trying to invest in the latest Silicon Valley startup or predicting the future of AI might be a risky move. On the other hand, if you understand the retail industry or consumer goods, you might find yourself making more successful investments by sticking to what you know. The key is to have the confidence to say no to opportunities that fall outside your area of expertise and to focus on industries where you can do thorough research and understand the long-term dynamics. Expanding your circle of competence is important, but it's just as important to know when to stop. Being realistic about what you understand gives you the discipline to pass on opportunities that don't align with your expertise, even if they look tempting. Buffett's genius lies not just in what he invests in, but in what he chooses to avoid. He's not trying to be a jack of all trades. Instead, he focuses on being a master of his own niche, which has been a critical factor in his success. So, how can you apply this in your own life? Start by assessing what you truly understand. What industries or sectors do you feel comfortable in? Where do you have experience? Or at least a strong understanding of how things work? Once you've identified your circle of competence, commit to it. Build your knowledge, learn as much as you can, and stay focused on those areas. The more you do this, the more you'll be able to identify opportunities that make sense for you and avoid the temptation to invest in things that don't align with your strengths. Remember, the greatest fortunes often come from focusing on what you understand deeply, not from chasing every trend. By staying within your circle of competence, you'll give yourself the best chance to make sound decisions, build wealth steadily, and avoid the costly mistakes that come from venturing too far outside of your knowledge. Section 3. The importance of patience. One of the most powerful and underrated qualities in building wealth is patience. It's easy to overlook because, in today's fast-paced world, everyone wants quick results. We live in a time where instant gratification is the norm. Whether it's getting the latest tech, receiving same-day deliveries, or even watching a video on demand. But when it comes to creating lasting wealth, this mindset can actually be detrimental. Patience, as Warren Buffett emphasizes, is one of the most important virtues in investing and wealth building. And it's something that's often overlooked in the quest for immediate success. Buffett teaches us that successful investing isn't about jumping at every opportunity that comes your way. It's about waiting for the right opportunity. He stresses the importance of staying focused on investments you understand and are confident in. And here's the catch: once you make that investment, you need to be prepared to hold on for the long term. This is where patience becomes critical. It's not just about having the ability to wait, it's about having the discipline to resist the temptation to make rash decisions or chase after the next hot trend. Let's think about it for a moment. Have you ever found yourself impatient with an investment? Maybe you bought into a stock or asset with high expectations, only to see it dip a little, and you immediately considered selling? Or perhaps you were searching for the next quick win, the next hot stock, hoping for an immediate payday. It's natural to want fast results. After all, who doesn't want to see their money grow quickly? But here's the truth. True wealth is built over time. The greatest fortunes are not the result of one-off, rapid gains. They come from consistent, thoughtful decisions that are held over the long haul. Buffett has often said that his ideal holding period for a stock is forever. This is a powerful perspective. It's not about finding the quickest way to make a profit or trying to time the market. Instead, it's about finding investments that you believe in and holding them for the long term. Even through market fluctuations, when you invest with this long-term mindset, it changes the way you approach the market. You stop reacting to short-term volatility and instead focus on the bigger picture. This is not to say that you should be passive or complacent about your investments. Far from it. Patience doesn't mean doing nothing. It means making thoughtful, informed decisions and being willing to wait for them to pay off. When Buffett invests in a company, he does so with the belief that it will grow over time. He doesn't worry about the daily or weekly fluctuations in stock price because he knows that the value of a solid business will be reflected in the long term. It's about understanding the fundamentals and trusting that these will drive value over time. The reality is that most people aren't patient enough. In fact, impatience is one of the biggest mistakes investors make. They chase after quick wins, buying into the latest trends or selling at the first sign of a downturn. This kind of reactive behavior often leads to missed opportunities and losses. When you're constantly jumping from one investment to the next, you never give your assets the time they need to appreciate. By the time you realize the potential of a long-term investment, it may already be too late. Look at some of the world's most successful investors, like Buffett or even tech moguls like Jeff Bezos. They didn't build their empires overnight. They made decisions that were often unpopular at the time, but they had the patience to see those decisions through. Buffett's investment in companies like Coca-Cola, American Express, and Apple are prime examples of how patience pays off. These investments weren't made with the expectation of immediate returns. Instead, Buffett saw the potential for long-term growth and held on to these companies through thick and thin. The key here is understanding that growth takes time. This is also where the concept of compounding comes into play. When you invest with patience, you allow your investments to compound over time. The longer you hold your investments, the more they can grow. This is the magic of long-term investing. The ability to earn returns not just on your initial investment but also on the returns you've already earned. Over time, this compounding effect can lead to exponential growth. In today's fast-paced world, patience can feel like a rarity. But when it comes to building wealth, it's essential. By practicing patience and taking a long-term view, you're setting yourself up for success. It's about making smart, informed decisions and sticking to your strategy, no matter what the market is doing in the short term. True wealth isn't built in a day, it's built over time. With consistent effort, informed decisions, and the patience to see them through. So, the next time you find yourself tempted to chase the next quick win or react to market fluctuations, take a step back, ask yourself, am I willing to let this investment mature? If the answer is yes, then you're already on the right path. Patience is one of the greatest assets in wealth building, and the sooner you embrace it, the sooner you'll see the results. Section 4. Overcoming fear and greed. Warren Buffett's famous rule for investing is one that has guided many of his most successful decisions over the years. Be fearful when others are greedy, and be greedy when others are fearful. At first glance, it seems simple, but it holds a depth of wisdom that can truly transform how you approach investing, and even life itself. This advice is timeless, especially when it comes to navigating times of uncertainty, when emotions like fear and greed tend to cloud judgment and drive people to make impulsive decisions. Take a moment to think back to the global financial crisis of 2008. It was a time of widespread fear. Markets crashed, the economy faltered, and uncertainty loomed over almost every financial decision. People were terrified, and many investors rushed to pull their money out of the market, abandoning their long-term strategies in favor of short-term safety. But here's the twist. For those who were able to detach themselves from the chaos, to remain level-headed and focused on long-term value rather than short-term panic, incredible opportunities emerged. Warren Buffett himself took full advantage of these moments. He didn't panic when the markets plummeted. Instead, he saw it as an opportunity to invest in companies that others had written off as too risky. He recognized that fear often leads people to undervalue assets that are solid and well-positioned for the future. The key here is the ability to maintain a calm, rational mindset during times of market turmoil. While the world around you may be frantically reacting to uncertainty, you must be willing to stand firm and stick to your strategy. In those moments of fear, opportunities often arise, opportunities that others overlook because they are too consumed by panic. The true test of an investor is not whether they can predict market fluctuations, but whether they can keep their emotions in check when others are losing their heads. Fear and greed are incredibly contagious emotions. Think about how quickly fear can spread during a crisis. One person gets nervous, then others follow suit, and before you know it, an entire group is caught in a downward spiral of panic. The same thing happens with greed. When markets are soaring, and everyone around you seems to be making quick profits, it's easy to get swept up in the excitement and start chasing trends, hoping to catch the wave before it crashes. But when you're driven by fear or greed, your decisions are no longer based on reason or strategy. They're based on emotions that can cloud your judgment. This is where the real value of Buffett's rule comes in. It's about staying grounded and sticking to your strategy. When everyone else is panicking, asking whether they should sell off their assets, you need to ask yourself whether your investments are still aligned with your long-term goals. In other words, don't let the emotional temperature of the market dictate your actions. Stay focused on your research, your understanding of the businesses you've invested in, and your overall financial strategy. This doesn't mean ignoring the market or sticking your head in the sand. It means staying true to your plan, understanding that the market will go through ups and downs, and that long-term value is not determined by the daily fluctuations in price. This principle of emotional control applies not just to the stock market but to virtually every aspect of life. In business, for example, there will be times when others are rushing to expand, take risks, or make hasty decisions, driven by the greed to capitalize on the next big thing. But if you can detach from the frenzy and stay true to what you know, you can avoid making rash moves that you might later regret. Similarly, in personal decisions, when everyone around you is making choices based on fear, whether it's fearing failure or fearing change, if you can stay calm and think through your decisions with clarity, You'll be better equipped to make choices that align with your values and long-term vision. An example of this in action can be seen in the way many successful entrepreneurs approach periods of economic downturn. While others may be cutting back and holding on tight to what they have, many of the most successful business leaders will double down on their strategies. Look for opportunities to innovate and invest in areas that others may deem too risky. They understand that adversity often breeds opportunity, and they see downturns as chances to position themselves for long-term success. Buffett has consistently demonstrated that by staying grounded and focused on fundamentals, rather than reacting to short-term emotions, he is able to make some of the most lucrative investments in history. And the same can be applied to your personal financial journey. Whether you're investing in the stock market, starting a business, or navigating personal financial decisions, the ability to manage your emotions and stay true to your strategy is a key factor that will set you apart from the crowd. Ultimately, the principle of being fearful when others are greedy, and greedy when others are fearful, isn't just about making money. It's about gaining control over your emotions and maintaining a clear, rational perspective in times of uncertainty. In a world that constantly shifts between extremes of fear and greed, the ability to stay calm, objective, and patient will help you make the right decisions for your future, while everyone else is caught up in the chaos. Section 5. Embracing simplicity. Warren Buffett often says that his approach to investing is simple but not easy. On the surface, this may seem like a contradiction. After all, we live in a world where complexity is often associated with sophistication, and it's easy to get the impression that building wealth requires mastering complex algorithms, deep financial models, or following the latest economic forecasts. But Buffett's philosophy is rooted in a much simpler, yet more effective, approach. Focus on the basics, stay patient, and trust your understanding. What Buffett is really saying here is that the best strategies are often the most straightforward. You don't need a wall of charts or a cutting-edge algorithm to succeed in investing. What you need is a clear understanding of the businesses you're investing in, the ability to stay calm during market fluctuations, and a willingness to ignore the noise that often distracts you from your long-term goals. This is a powerful lesson that can be applied not only to investing but also to personal finance in general. The truth is, when it comes to investing, most of the complexity comes from the way people make it seem. They often get caught up in trying to time the market, predicting the next big thing, or chasing after trends. But Buffett teaches us that these distractions often lead to more harm than good. Instead of worrying about macroeconomic predictions or getting swept up in every piece of financial news, Buffett focuses on understanding the businesses he's invested in. He doesn't need to predict the future of the economy. He just needs to understand the fundamentals of the businesses and industries he's investing in. This simple but effective approach has helped him build a fortune, and it's something we can all learn from. Take a step back and think about how you manage your personal finances. How often have you found yourself chasing after the next financial trend? Maybe you've heard about a new stock that's hot, or perhaps someone you know is making a lot of money in real estate or cryptocurrency. It's tempting to jump on these bandwagons, but doing so can often lead to unnecessary risks. Instead, think about focusing on what you truly understand. If you don't understand a particular investment or market, then it might be better to stay on the sidelines. The same goes for managing your money in general. Rather than constantly trying to find the next big thing, focus on the basics, saving consistently, understanding where your money is going, and making smart, informed decisions. Buffett's approach is also about being clear on what you're investing in and why. He famously avoids investing in businesses that he doesn't fully understand, and that's a principle we can apply to our own finances. Too many people try to invest in things that they don't understand simply because they've heard someone else talk about it or because it seems like a good opportunity. But without a deep understanding of the investment, you're taking unnecessary risks. Buffett's advice here is to only invest in what you know and understand. This simplicity allows you to make better, more confident decisions that will pay off in the long run. This is not to say that you should avoid learning or exploring new areas. In fact, expanding your knowledge is an essential part of building wealth. However, Buffett teaches us that there's no need to complicate things. You don't have to master every financial tool or follow every market forecast to be successful. Focus on the core principles that will bring you success: saving, investing wisely, and being patient. For example, look at how Buffett invested in companies like Coca-Cola and American Express. These are simple, understandable businesses that have long-term value. He didn't invest in them because they were the latest trends or because someone else was talking about them. He invested in them because he understood their business models, their potential for growth, and their ability to generate steady returns over time. That's a lesson we can all apply to our own investments. If you focus on understanding the fundamentals of what you're investing in, you'll be better equipped to make sound decisions. Simplicity in investing also means having the discipline to stick to your plan. It's easy to get distracted by all the noise around you, the predictions, the headlines, the financial gurus telling you what to do. But Buffett's approach is to focus on the things that matter. Block out the distractions, and stay patient. This kind of discipline is key to long-term success. Rather than constantly jumping from one opportunity to the next, Buffett sticks with what he understands and patiently waits for his investments to grow. By embracing simplicity, you can also reduce the stress that comes with managing your finances. When you focus on the basics and avoid the complexity, you're not overwhelmed by the constant need to track every little detail or predict every market movement. Instead, you're making clear, informed decisions and letting them work over time. This kind of clarity and focus is one of the biggest reasons why Buffett has been able to achieve such remarkable success. His approach is rooted in simplicity, focusing on what's important and blocking out the noise. So, the next time you find yourself getting caught up in the complexity of investing or chasing after the latest trend, remember Buffett's advice: keep it simple. Focus on understanding the businesses you're investing in. Stay patient, and trust your knowledge. With this approach, you'll not only reduce unnecessary stress but also set yourself up for long-term financial success. Section 6. Creating wealth in the real world. Now, let's take this discussion about creating wealth and elevate it to the real world. You've learned the principles that Warren Buffett applies to investing: patience, emotional control, a focus on simplicity, and staying within your circle of competence. But how do you take these principles and apply them to your own life, to actually create lasting wealth and success? First and foremost, it starts with your mindset. The key to success isn't just about making money or accumulating assets. It's about understanding who you are, your strengths, and your long-term goals. Too often, people chase wealth without ever stopping to ask themselves what they truly want out of life. They follow the money, thinking that if they just make enough, everything will fall into place. But as Buffett often points out, wealth building is about so much more than just financial gain. It's about doing something that aligns with your values, passions, and strengths. Let's talk about career choices for a moment. If you want to create lasting wealth, start by choosing a career or business venture that excites you. You see, when you're passionate about what you do, it's no longer work in the traditional sense. It becomes something that you enjoy, something that drives you every day. And when you enjoy what you're doing, you're much more likely to put in the extra effort required to succeed. Now, you may have heard the saying, do what you love, and the money will follow. This is absolutely true. Buffett's entire career has been built on doing what he loves, investing. And that's the key to long-term success. Doing something that excites you and that you can get behind wholeheartedly. Sure, there may be times when you need to make short-term sacrifices or make decisions that seem less than ideal in the moment. But the overarching principle should always be that your career, business, or investment pursuits should align with your passions. I can speak from personal experience here. I've worked with countless entrepreneurs and investors who initially chased after opportunities because they thought they were the next big thing, or the quickest way to make money. But when they didn't have a true connection to what they were doing, they quickly burned out. However, when people focus on building something they are passionate about, something they can truly invest their energy and time into, success follows in ways they never expected. This is why it's important not just to follow trends but to find something that genuinely excites you and that you can see yourself working on for years to come. Once you've got your mindset in the right place, the next key is the people you surround yourself with. You've probably heard the saying, you are the average of the 5 people you spend the most time with. Well, there's a lot of truth to that. If you want to succeed, you need to associate with individuals who inspire you, motivate you, and encourage you to do your best. The people you surround yourself with can either lift you up or bring you down. That's why it's critical to choose your circle wisely. Look at the people you spend the most time with, your close friends, mentors, colleagues, and ask yourself, do these people inspire me to be better? Do they challenge me to grow? Or do they hold me back with negativity, complacency, or a lack of ambition? If the answer is the latter, it may be time to reevaluate those relationships. Building wealth isn't just about financial decisions, it's also about the social environment you're in. You need people around you who have a growth mindset, who understand the value of hard work and patience, and who push you to be the best version of yourself. I've seen countless successful people reach their goals not just because of their own abilities, but because they surrounded themselves with individuals who supported them, shared their vision, and held them accountable. These people become a source of inspiration, a source of strength, and a network that opens doors for new opportunities. On the flip side, if you're surrounding yourself with people who are content with mediocrity, it's going to be much harder to break out of your comfort zone and make the moves necessary to build wealth. Now, let's bring this all together. In order to create wealth in the real world, you need to build a foundation based on your passions and your strengths. Don't chase money for the sake of money, chase what excites you. Build a career, business, or investment strategy that aligns with your values and interests. Once you've done that, surround yourself with a strong support system of people who encourage you, motivate you, and challenge you to keep pushing forward. Warren Buffett has spent decades building his wealth and success, not just through smart investments but through a deep understanding of who he is, what he's good at, and the relationships he's built. By applying these same principles, focusing on what excites you, and choosing the right people to accompany you on your journey, you can create lasting wealth that isn't just measured in dollars, but in personal fulfillment and long-term success. Remember, wealth building isn't a race, it's a journey. And the more aligned your work is with your passions and the stronger your network of support, the easier it will be to reach your goals. Keep focused on your vision, be patient, and surround yourself with the right people, and you'll be well on your way to building the kind of lasting wealth that brings true freedom and fulfillment. To sum it all up, Warren Buffett's secret to getting rich is surprisingly simple, yet it's something that many overlook. It's not about being the smartest person in the room, and it's certainly not about having insider information or some magical formula for success. The key to Buffett's incredible wealth is rooted in having the right temperament, understanding your circle of competence, and exercising the patience to wait for the right opportunities. We often hear about people trying to predict the next big thing or trying to outsmart the market. But the truth is, Buffett's strategy isn't about complex algorithms or constantly chasing trends. It's about knowing yourself, your strengths, your understanding, and your limits, and sticking to that. It's about having the emotional discipline to stay calm during times of uncertainty and ignoring the noise when everyone around you is acting impulsively. Fear and greed are powerful emotions, and they can lead to decisions that don't align with your long-term goals. If you can avoid falling into those traps and instead commit to a simple, clear, long-term strategy, you'll set yourself up for financial success. One of the most important takeaways from Buffett's philosophy is that wealth building is a marathon, not a sprint. It's easy to get caught up in the desire for quick wins, especially in today's world where everything seems to move so fast. Social media, news, and even financial markets seem to reward speed and instant gratification. But building true, lasting wealth takes time, and it requires you to stay focused, stay patient, and remain true to your strategy. There's no shortcut, no magic trick, just consistent effort, thoughtful decisions, and the ability to trust the process. And here's the thing, when you follow these principles, not only will you build wealth, but you'll also build something far more valuable, peace of mind. When you stay calm, focused, and disciplined, you eliminate a lot of the stress and uncertainty that come with chasing every trend or reacting to every market movement. You stop worrying about what everyone else is doing and instead focus on your own goals, your own understanding, and your own journey. And that's when real success happens. I hope you've taken away some powerful lessons from today's video. The next step is to put them into practice. Start by identifying your own circle of competence. What do you truly understand and feel confident about? From there, begin making investments in your life and your finances that align with that understanding. Focus on the fundamentals and avoid getting distracted by the latest fads or the noise of the market. And most importantly, be patient, let your investments and your decisions grow over time, and trust that the work you're putting in today will pay off in the long run. I want to thank you for taking the time to watch this video and invest in your own financial education. You're already ahead of the game by being here and seeking knowledge. Now, it's up to you to take action and start applying these principles to your own life. If you found this video valuable, don't forget to like, subscribe, and hit that notification bell so you don't miss out on future lessons that will help you unlock even more strategies for personal growth, financial education, and success. Remember, wealth building isn't just about making money. It's about building a life that aligns with your values, your strengths, and your goals. So, keep working toward your limitless success. Stay focused, stay patient, and most importantly, stay true to who you are. Until next time, take care and keep pushing forward.